All right, hello everyone. Evening. Okay, welcome to Portfolio Building Live with Terence on Friday nights over here, and the market is open. All right, let's see what the market has installed over here for all of us. It's down 17. We finally have a red day. How ironic, yeah. All right now, so markets are down, and hang on for a minute. Let me just close out one of my earnings trade right now for profit, and then I'll get to it. Okay. All right, there we go. All right, just made a 50% ROI in just one day, 24 hours. Like it. Okay, all right, now let's go on and let's move on over here. Hang on, let me just check. I've closed everything out. Yes, I have. Okay, all right, now sorry about it. Welcome back. And yes, Jason, is a red day. Now, so Facebook user, can you do me a favor? Could you click on the StreamYard button, StreamYard link right at the Facebook post itself, and then allow StreamYard to access your Facebook. All right, so we'll be able to see who's leaving the comments over here during our sessions. Okay. All right, now thank you very much. So once again, this is Portfolio Building Live with Terence. So what I do in these sessions is basically show everyone who's joining us right now how to easily build a portfolio based on selling options instead of owning the stocks, right? And generate income, okay? And ultimately produce an ROI on a portfolio right now that pays about 20% per annum and upwards on a regular basis. Okay, so we're gonna do all the trades live over here on our demo accounts. Not even a demo account. We call it a demo account, but it's a demo live account. Yeah. All right. So we do this with real money during this platform over here. But please understand all disclaimer applies. Okay. So you do have to do your own risk assessment and make sure you're comfortable before taking on any of the trades that I mentioned during the session. All right. Now, so I'm gonna get started. Hi, Aulun. Hi, Ikai. Hi, Jason. Hi, Josephine. Hi, Sunny. All right. Welcome. All right. Hi, Terence. Okay. Thank you for turning up every weekend over here. Now, if all of you can share some of your generous love over here, right, and click the share buttons during in the Facebook post itself, right, that will really help us reach out to the masses over here and show them what we're doing on a regular basis. It also allows people to understand a little bit more about how simple options can be when it comes to building a portfolio and yet produce an outsized return, all right, than what the bank pays you keeping the money in there. Okay. All right. Now, so as all of you can see, it is blatant. It is out there. It is in front of your screens. Okay. As of our portfolio right now, we have taken our second share. All right. So we are forced to buy ED over here into our accounts. Okay. So we are assigned on expiry over here last weekend. All right. As the stock expired, as the option expired. Okay. And right now, oh man, I was waiting for today, right, to sell some calls over here, but markets are down by $1. It brought the stock down by $1. That's perfectly fine. All right. So what we're gonna do over here is this. Oops, hang on. Hang on, everyone. Let me just make sure my font sizes on my platforms are large enough for all of you to see. At the risk of hanging the entire platform. Right now, here we go. Now, so this is what I'm going to do over here with kind of ignoring the market up and down days over here. I should have done this yesterday, but I wanted to keep it during the live sessions. Nonetheless, I'll still execute it. So what I'm going to do right now is I'm going to generate income while I'm owning the stock. All right, so I'm going to look to sell call options. I'm going to look to sell the $70 call option, which expires 1 month from now, okay, on the 19th of Feb. Okay, so I'm looking to sell the $70 call option and pocket about 95 cents in premium. Okay, all right, so if any of you followed this trade and you actually own the stocks right now, okay, you can go ahead and sell the call options over here for about 95 cents. Okay, 95 cents, everyone. Okay. All right. Now, so you could just go ahead onto your platform and place that order. Okay. And it should get you filled. Okay. It should get you filled. Okay. Now, and when that is filled, okay, we would have added 95 cents into our cash flow over here. All right. So trade 30. All right. 3 of the ED. All right. Call options. Okay. That expires on 19th of Feb. Okay. For the 70 call. Okay, we're executing it today. What's today's date? 22nd of January. Okay, and we got, how much are we getting? 95 cents. Ah, I see someone doing it. All right. Okay, just for 6 over here, it was 90 cents, so I'm just going to get it filled at 90 cents. Oh, we have a fill at 97. Congratulations. So 95 is the fill then. All right, we saw the last done price actually changed. All right, so some of you got filled at 97. Okay, now, so we generate another $285 in cash flow from this selling of the call options. It doesn't require any additional deposits or margins because you have the stocks to deliver. All right, so right now, this strategy is what we call a covered call. All right, so I sold the put options, I got assigned the stock, and I'm fully comfortable with it. So right now, I'm generating more premiums and more incomes by turning around and selling a call option. Now, so when you sell call options, your obligation is to actually sell the stock. So in my case, my obligation is to sell the stock at $70 to someone on the expiry date. Okay, and I'm getting paid 95 cents right now, okay, for doing so. Okay, for that obligation. So I'm gonna take it up. All right, we generated $285. Okay, and actually, let's do this. We generated $255 from selling the put options that expired as well. Right. So right now, this stock has generated well over $500, right, for our portfolio. Right. That's not too bad. Okay. If you're comfortable with holding on to the stock. Now, then we have CPB, we have GIS, which food companies have been experiencing a little bit of a sell-off. Right. So we see liquidity or what we call rotations in sectors. So people are moving money out of the safe defensive stocks and have been moving these money into technology stocks over the last week. All right, that means throughout this week over here. All right, now, so that's what has been happening. So in case some of you have been wondering, why are companies like Kellogg's, why are companies like CPB, all right, why are companies like GIS actually being sold off? That's because they're moving the funds out of these defensive stocks and pushing them into technology. So they're basically trying to chase performance. Yeah. Okay. Now, so I'm not too worried about that because many of these stocks are already at depressed valuation. So I'm fully comfortable in my positions and I'm keeping them open right now. Now, so no further portfolio management actions to be taken. All right. Our VIX is also sitting very, very well right now. Okay. As all of you can see in today's drop day. Okay, today we have a drop day. Okay, the VIX right now has spiked $1, all right, and we're at 22.44. Okay, so we have the February $20 put option. Okay, so we have the February $20 put option, which is worth only 40 cents right now. Okay, so yeah, I could actually buy it back today, all right, for just 40 cents. Okay, if I want to close the trade and pocket half the premiums. Yeah, okay, all right, that would be about a 1 month trade over here. So it ain't too bad, but I'll just wait out. I'll wait out for a little longer. Let me just see. Nope, no benefits. So I'm just gonna hang in there. Yeah. All right, now, so I'm keeping this trade right now and I'm not moving the expiry. So no management actions today. All right, let's see if I could do something on our Nokia over here. All right, because we do have the Nokia stocks as well that is delivered to our portfolio. So let me have a look. I sold the Nokia and I'm going to do this. All right, now, so everyone, I'm also going to turn the Nokia trade into a covered call. All right, so what I'm going to do is I'm going to go all the way out to February. Okay, this is playing a little bit defensive. All right. Okay, so I'm going all the way out to February over here, 19th of Feb. Okay, and I'm actually looking to sell the $4.50 call. right? And I'm just going to take the bid price at 19 cents over here, right? Bid price at 19 cents over here. So for every, how do I say this? For every call option that you have, sorry, for every stock, 100 shares that you have, all right, what I want you to do right now is to sell 3 call options, right? 3 call options. Okay, so that would be a definite fill because the bid price in the market is 19 cents after all. All right, so Nokia calls 19 of Feb, it's 450, right? 22nd of Jan, and we got 19 cents for it. So we generated another $57, all right? Okay, $57 in premium. Okay, it doesn't require any additional deposits. Right now, so let me just explain a little bit of why I'm doing this because it seems like the 5G game takes a little bit longer to unfold right now. Sorry, to unfold right now, and for our reason behind this play to actually play along. Now, so I'm trying to sell premiums for this because I don't expect the stock to move anywhere above 5 or beyond that in a short time frame anytime soon. But if you realize what I'm doing over here, I've pocketed 39 cents from selling this put option. Okay, and now by selling this call option, I'm pocketing another 19 cents. Okay, so if I add them up, that's a total of 40 and then 18. So that's 58 cents over here. All right, 58 cents is my total premium collection. Okay, and if my shares get called away, all right, somebody will pay me 450, all right, to take my shares away from me. So yes, I will be risking 50 cents of losses on the share, okay, but that will be covered by the total premium, all right, that I've collected from the options that I've sold on Nokia. Yeah, okay, all right now. So that's the reason behind this. And if it does happen over here, I may actually come back to Nokia and then sell a put option on it all over again. Yeah. Okay, so this is just playing defensive with the markets at peaks right now. Yeah. Right now, so I've just pocketed a 19 cent over here and brought the break-even price of my ownership in Nokia stocks to only just $4.42. Right, so my break-even price on Nokia shares right now is $4.42. Right. Okay, now so that's how it works over here when you want to build a portfolio, being an option seller at the start. Okay, so portfolio actions are all taken right now. So let's go to the trades. Okay, I'm only going to add 1 trade today. Okay, one trade today. Okay, and what I'm going to do is I'm going to go to, anybody wants to give a guess? What stock am I adding? I actually gave a hint just now. While waiting for some replies, because there is some lag on StreamYard, right? I'm just going to prepare the entries over here. Trade 33. Which stock? That leaves to be seen. Which expiry? Leaves to be seen. 22nd of Jan. Nobody wants to make a guess. All right, now, by the way, all right, once I've talked about the stock, Campbell, Eric Campbell, I've already got a trade on Campbell, so I won't be adding further. Yeah, all right, so I already have a position on it, so I won't be adding further, but you're close enough, right? You're close enough. All right, Anthony, I'm definitely not adding WBA. All right, definitely not WBA after the recent run up that it has. All right, in fact, I have been trying to sell call options on WBA. Okay, and made a little bit of profits here and there. Eric, double down. You don't have to, right? Because how do I say this? You could double down on a similar company in the same sector without taking on the same kind of risk in the individual stock. Yeah, okay, but again, it depends all on your portfolio exposure. Now, for example, if you look at Campbell over here, it now has about a $13,800 deposit requirement for the full cash amount. Okay, and this is a $100,000 portfolio, like I mentioned earlier. So that already represents a 13.8% exposure of my total account. Right, so that's a 13.8% exposure on my total account. And it doesn't make it very sensible and feasible to actually double up on it. Yeah. Okay. So Eric, for portfolio exposure purposes and safety of the portfolio, that's one of the how do you say, considerations of why your suggestion, all right, is not part of my consideration. Okay, but if I took on a smaller exposure, like one contract on my earlier trade, yes, I would consider adding on a second one right now. Okay, Eric. Now I hope that provides basically a kind of an idea of why I do it and why I don't. Jason and Siwan, all right, Kellogg's, all right, Kellogg's was in my intention. It's just not ready just yet. Okay, it's just not ready yet. Okay, as compared to the stock that I've just found out. Okay, or found for today's session. Albert, Intel has too good a run up over here. All right, it ran up way before the earnings today, and in fact, Intel was the stock that I made 50% ROI on the trade today. All right, okay. So nope, I'm not looking at Intel. Facebook user, all right, you mentioned Kroger. Kroger is a little extended, right? So Kroger is fundamentally cheap, right? But it's currently a little extended right now. So I would like to see it come off a little bit more, okay, before taking on anything. All right, Kraft Heinz, no. Eric, no. Kraft Heinz, no. All right, now, without waiting further, let's go. All right, what stock am I looking at today, everyone? Ready? Day. Here we go. I'm looking at Conagra. Right, so I say close enough because it's a food company. All right, but I'm looking at Conagra Brands. Okay, now, so Conagra Brands is right now trading at a PE of about 15. Okay, it's trading at a PE of 15 and provides a dividend yield of about 3.22%. Right, so that's pretty decent. Right now, and some of you mentioned Kroger. Some of you mentioned Kellogg's. Right now, so Kellogg's is trading at 16 PE. That makes Conagra actually slightly cheaper in terms of valuation as compared to Kellogg's. Yeah, okay, all right now. So actually, I like Conagra better at this very moment. Now, so what I'm going to do over here is Conagra right now. Another reason why I like Conagra is because its earnings is already behind us. All right, so the earnings is already behind us. It doesn't show over here. Yep, it doesn't show over here, but I can show you. All right, it is already over. All right, because earnings was on the 7th of January. All right, it actually produced better than expected earnings. Right, but yet the stock price was being punished. Yeah, okay, yet the stock price was being punished. Okay, so right now I like the fact that it's trading like in a channel over here. All right, so I don't expect a lot of movement from this stock. All right, and I like what I see. Okay, so I'm going to take a position all the way out into June. Okay, for this portfolio, I'm going to take a longer trades on slightly more undervalued stocks. Okay, right now, so I'm looking to sell the, oh man, the stock went up. So it spoiled my plans a little. All right, now, so what we're going to do is similar to last week. All right, we're going to submit an order. Okay, and then we're going to wait for the premiums to come to us. Okay, all right, now, so I'm going to sell the 34 puts. Okay, I'm going to sell the 34 puts, and I'm going to place my order at 260. Okay, but today, what I'm also going to do is this. I'm going to bring down my exposure. Okay, that means I'm only going to sell a 2 contract over here today. All right, I'll explain to you why I'm not taking a usual 3 contract size. Okay, but I'm only taking a 2 contract size on Conagra today. So I'm going to place my order for 260, right? And let's see if the market bites it. Okay, my order is submitted. As all of you can see, 260 appears over here, all right, but it's not being bitten by the market yet. So I'm just going to leave it because if today's tone of the market drags this stock down into the red, right, we should be able to get our order filled at 260. Okay, but let me explain the rationale behind it. Okay, now the rationale behind why I'm doing this over here is because right now, where am I? Okay, here, sorry. I'm already at what I call a 75,900 exposure over here, right? Even if I take out the VIX, which cost me $6,000 in deposit requirements, okay, because that's like a portfolio hedge, so I can consider to take it out, but I'm still exposed at about $70,000. So that's about 70% exposure right now. So I don't really want to put on too much and too heavy with overvaluations happening right now. Okay, but it is still a good trade and I don't mind taking it. So that's why I'm putting on a 2 contract valuation over here. So 2 contracts of Conagra at 34, would be a investment requirement of 6,008, right? So that's not too costly. That's still acceptable over here, right? So that will be how I do the exposure. Right now, great question, Terence. All right, so Terence basically asked the question of Conagra has a dividend on 28 Jan. That's actually good. All right, trust me, that's actually good for us selling puts prior to the ex-dividend date, because usually ex-dividend causes the stock to run up, leading to the ex-dividend date. Right? Yes, some of you will say that, hey, Terence, on ex-div date itself, all right, we may see the effect of the stock dropping, all right, and the dividend is 27.5 cents, so it's nothing too severe. Like I said before, I think in one of the past sessions. Okay, so this dividend is not very hefty; it's only 27.5 cents. Okay, and based on the strike price that we are selling on and the premiums that we're collecting, right, it is kind of like not too significant over here. So I'm not too concerned. All right, so basically, dividend risk is more evidence for call sellers, right, for call option sellers rather than put option sellers. Yeah. Okay, so I'm perfectly comfortable with that. All right, now, so let's go on and head on to questions. If any of you have questions, you could buzz it out right now into the comment section. All right, I should be able to handle a couple of questions before we put out the session for another successful week over here. Market is still not biting, all right, but we're getting close, everyone. We're getting close. The bid and ask now is 245, 260. All right, we're getting closer. Right, since my portfolio has such a big exposure right now, that's why I'm choosing to negotiate for the premiums that I want rather than to try to give it to the market makers. Right now, while waiting for some questions over here, we have started. Right, we have started our different forms of mentorship programs over here for 2021. So if any of you are interested to find out how you could do similar things, which is selling options like what I've shown you over here and generate great income, right? But do so with much smaller capitals, right? Like accounts for 2,000, 3,000 and upwards over here, right? You could take on one of our mentorships and we could show you how to do similar trades over here with much, much smaller investments requirement. Yeah, okay, so that's what we cover in our mentorships. Different strategies for selling options that allow us to do this with deposit requirements of just $100 or $250, right, per trade over here. Yeah, all right. So send an email to my team over here, and we can send you more details after that. Okay. All right. Now, so I have a question coming in, so I'm going to address to it. Eric, when is Jeremy coming back? Jeremy is busy right now. All right, but let me try to get a hang of him. Right, I have been trying to get him to do a session again on the weekends. I haven't been able to do so. All right, but he will feel great. All right, he'll feel great that people are missing him. All right, let me get to him. Okay, all right, Eric, let me try and get to him and see if we can run a session before we finish January. Okay, or maybe at the start of February. Okay. All right. All right, EL, you're still holding on to the PFE $36 call option. I'm assuming, all right, that you don't have the stock. You're just buying the call option over here. All right, so again, if you are choosing to buy the call option, you have to look at what's your expectations. Okay, what's your expectations of the stock itself? All right, and yes, you are right. There is earnings on February the 2nd. All right, so you also have to take into considerations what's your expectations on the earning. Do you expect it to spike up, all right, and bring you big profits over here because you're a buyer of the call option, or do you actually expect it to drop off? Okay, now just a hint over here, EL. Your hint could be, all right, before Pfizer's earnings comes about, all right, go into the entire healthcare industry and more specifically drug-based companies that are similar to PFE. All right, go and look at how many of these companies that have already announced their earnings, okay, and look at how their stock price have moved on earnings date itself. Okay, which means they're competitors like maybe Bristol Myers, AstraZeneca. All right, look if their earnings have already been out. Okay, and if it's been out, right, how did the stock react on earnings date itself? Okay, so that could give you a guideline of what to expect from PFE's earnings results. Okay, just an idea to see it in your head over here, whether you can decide to hold or to, really close it off before the earnings come about. Okay, EL, I hope that helps you. Eric, yes. All right, yes, definitely. All right, I hope to be able to bring him back over here. Okay, anyone else with any other questions before we call it a session over here? Welcome, welcome, EL. Okay, if that's the case over here, thank you very much, everyone. Okay, I'll end off another Friday session with all of you over here, and look forward to the weekend. I have I actually do have training over the weekend, right, where I teach a group of people how to build a simple portfolio on some great stocks over here. Yeah, all right, now, so have a great night ahead, a weekend ahead, all right, and I'll see all of you next Friday. All right, I'll just answer one more question over here from Bunchet. All right, because it came in before I say bye-bye. All right, so Bunchet is saying he's new to options trading. May he know what options platform I'm using over here? For most of my personal trading over here, all right, I do a lot on TD Ameritrade. Okay, so this is the TD Ameritrade platform. But for the purpose of this portfolio building live sessions, I actually do the actual portfolio tracking on another account on Interactive Brokers. Yeah, okay, all right. But most of my trading is actually done on TD Ameritrade. Yeah, okay. Now, this is something that we do share with our participants over here. That comes from our mentorship program. So if you want to find out more about how to get started on selling options, okay, you need to know exactly what you're doing. That's very, very important. All right, find a mentor to help you out. Okay, if you think I'm not the right one for you, that's perfectly fine. But do make sure you find a mentor, right? Because there are a lot of potential pitfalls, okay, when you jump into option sellings if you're not familiar with what you're doing. Yeah, okay, Bunjet. All right, so of course, we hope to see you in the mentorships, all right? But if not, the platforms we use is TD Ameritrade, okay? Or you could also look at Tastyworks. Tastyworks has been bought out, all right? Tom Sosnoff is a very, very smart guy, all right? He's been bought out for TD Ameritrade, right? He's been bought out by IG Markets for Tastyworks. Oh my goodness, 2 big paydays within the last, Within the last 5 years or so. It's crazy. Facebook user. Unfortunately, I don't know. I don't know who's representing this, but yes, I do believe TD Ameritrade still accepts client accounts from Malaysia. All right. Why? To be honest, why is it appearing on your Nagara list? I have absolutely no idea. All right, but I'm just suspecting maybe because it has the element of FX trading on their platform. All right, but as a stock brokerage, they are one of the biggest, and as all of you have heard recently, they have been bought out by Charles Schwab as well. All right, so they're definitely a legitimate brokerage and one of the biggest out there. All right, but why the Malaysian government has put restriction on it, I cannot comment on that. Okay, but they are definitely still accepting Malaysian accounts, as I know right now. Okay, so if you want to go ahead, you could go ahead and open an account with them as well. All right, if you do so, all right, you could also, in the part of the process, all right, under where do you hear about TD Ameritrade, all right, you could always select education partners, all right, and write us down over there as where you hear TD Ameritrade from, right? And you could type in our partner name over here with them, all right, which, if I'm not wrong, should be appearing as First Traders Network. Oops, no, that sends out to YouTube over here. All right, let me get it off. Ah, man. All right, now you could put it off as First Traders Network from the drop menu, yeah? All right, yes, it seems like TD Ameritrade has issues with Malaysian telcos when it comes to access, all right? But if you're a Celcom user, MY Celcom, all right, I believe you still be able to access to the trading platform. And I heard that all the fiber internet are doing fine as well. All right, so it's basically the ISP, like Ikai has said over here. All right, but not all ISP. All right, not all ISP. All right, I believe the fiber internet, and I heard last MY Celcom still works. All right, I'm not sure if it's updated as well, but that's what I've heard from some of our students over here. All right, thanks Ikai for sharing. Okay. All right, now, so I'm going to call it a night over here for this session, and I'll see all of you in next Friday session again, everyone. Thank you very much for turning up, and hit the like button and hit the share button with a short comment over here before you leave this session, right? If you like what I've shared and what I've done with all of you today. All right. Thank you very much. And I'll see all of you next Friday, everyone. Bye-bye and good night. Yes, Facebook user. The name is First Traders Network. All right, First Traders Network. I will leave a comment in your Facebook. I'll reply to your Facebook comment when this session ends. Okay. All right. Thank you very much. Good night.